This is Matthew Cratter from Trader University, and today I want to talk about the Bitcoin mining stocks, in particular RIOT and BTBT. But you're going to learn a lot about how Bitcoin mining companies work, and in the process, you'll be able to make your own decision about some of the other names out there. I get this question a lot. Bitcoin has gone up so much. Is there a stock, is there a Bitcoin mining company or a blockchain company that I can invest in instead? Here's a chart of RIOT, which is the main miner we're going to be talking about. RIOT has gone up really a tremendous amount as we've seen a lot of flows, mostly flows from, I would say, very naive retail investors. But we're going to go into that. If you don't know what Bitcoin mining is, it's basically running these computers, these very specialized computers called ASICs, to solve a mathematical puzzle and be rewarded with the next block of Bitcoin. If you want to learn about this in depth, I'll link to this video that talks about exactly what the blockchain is, what miners are, what nodes are, etc. I should start by saying, though, since we're talking about Bitcoin mining is a highly competitive, highly industrial, global, very low margin as well, a low margin business. Now, low margin, highly competitive industrial businesses tend not to be good investments over time. They tend to often just produce commodity products that are somewhat interchangeable. You don't really care where you buy your staples from or your straws or something like that. And because these are things that are used by everyone, they tend to decline to the point of zero profitability or very low margin profitability. You constantly have new entrants that come in and they drive down these profit margins. Now, I should also start by saying you see a lot of scammy stuff on YouTube, sometimes even in comments when people are spamming my videos, saying that you can mine Bitcoin on your phone or sign up for this cloud mining service. You can no longer mine Bitcoin on your phone. It's just not possible. The processor is not powerful enough. So these are all scams. You should ignore them. You also cannot mine Bitcoin anymore using a CPU or a GPU. You need a specialized machine called an ASIC. These machines are very expensive, and you constantly need to upgrade them to the latest machine when they're available, because we're in a hash rate arms race where everyone is trying to get the most powerful computers to mine Bitcoin. And this is one reason that the profit margins get driven to zero or get driven very low. To mine Bitcoin, you also need a very low cost of electricity. If you live in the United States and you live in Europe, for example, you're not going to be able to just do this in your house. I've heard that ASICs are very, very noisy, but the chances are that unless you have some very low cost of electricity, that you won't be able to do it. Maybe if you have free electricity, if it comes with your apartment, you might be able to do that. But even then, you're going to need to shell out thousands of dollars for one of these ASIC machines. Bitcoin miners are competing with every other Bitcoin miner everywhere in the world. And some of these other miners might be very specialized. They may be, like many companies in the Chinese economy, they're very, very good at this sort of industrial stuff, producing it cheaply, running it cheaply with a very low cost of labor, and also having a very low cost of electricity. Maybe they have geothermal or solar, maybe they're subsidized by the state, etc. China, where they do the Bitcoin mining, has very low electricity costs. They're mostly the electricity is generated using water dams, river dams, etc. This is a measurement of what's called network difficulty, how difficult it is to mine a new block for the blockchain. We can see that this has just gone up a tremendous amount, and it's really a one-way direction. You occasionally get little drawdowns, but it becomes more and more difficult over time to mine Bitcoin. This is part of the point. The more difficult to mine it is, the more expensive the input costs are, and thus the higher the price of Bitcoin needs to be. So Satoshi was really a genius the way he set this up. Where I get skeptical is when I hear about these North American mining companies, not the newer ones, not the one that I believe is funded by Peter Thiel in Texas, which is a very smart company. It's not publicly traded. You can't invest in it now. But these these what used to be penny stocks like Riot Blockchain, the fact that they are mining in New York State and competing with China and competing with South America and some of these cheaper places just really boggles the mind. We can see that here just recently they bought a lot of new ASIC machines. These are the S19 Pro Antminers. These are the main ones that are used to mine Bitcoin these days. They're very expensive. I'm sure Riot got a better deal than this, but if you just look it up and try to buy it from Bitmain, they're about almost $3,000. This probably does not include shipping, and they're completely sold out, which tells you something about how Bitcoin is taking off and how there's fundamental demand for the picks and shovels that are used to mine Bitcoin. Let's take a look at the financial statements for Riot. I'm taking this, I believe, from an 8K. This is for the results for the 9 months ending September 30th, 2020. This is the most recent data point that I could find. They'll probably be reporting earnings soon. So this is a little bit dated. Bitcoin prices were lower from January 1 through September 30th of 2020, but this at least is indicative. The mining revenue from mining, mostly Bitcoin, I think they mine a couple other cryptocurrencies, but the bulk of it really is Bitcoin. $6.7 million in revenue coming in. The cost of that revenue, which is mostly electricity, rent, other utilities running these miners, is $4.1 million. Depreciation is where you sort of allocate the cost of the mining equipment and you depreciate it over time and it flows onto the income statement. It's a way of measuring the cost of the capital equipment that's used to mine Bitcoin, in this case, the ASIC mining machines. These need to be eventually replaced, and as such, you need to depreciate them to allocate the cost of replacing them or the previous cost of buying them to the income statement. So just looking at the revenues, subtracting out these costs, depreciation is a non-cash expense. Nevertheless, it's a real expense that needs to be paid in the form of capital expenditures every couple of years, as we saw. They just did this in January of 2020, but it doesn't leave any profit after this is all said and done. They lost $200,000 on their Bitcoin mining. Just looking at these line items. And then there's the additional one of basically personnel, selling, general, admin expenses. This is a company where the executives pay themselves very well. That was an additional $8 million in expenses. So they basically had mining revenue of close to $7 million, and they lost $8.2 million once you take into account SG&A. So this is what we would expect from an industrial process. The profit margins are razor thin. This is a poorly run company. It's a scammy company where they pay themselves really well. They're not interested in making money. I don't believe the company's ever had a profit in any year since inception. If you're finding this video helpful, I'd encourage you to hit that subscribe and like button. Now, one way to think about mining, and a very useful way, is to compare gold miners to the price of gold in the same way that we're comparing Bitcoin miners to the price of Bitcoin. This is a chart of Newmont Mining, which is one of the biggest gold miners in the world. The company's obviously changed over the years. They've bought some companies, they've sold some operations, they've paid a dividend, a relatively small dividend. It's been high at times, low at other times. But if we look at this, we can see that the current price, which is roughly around $57, $58 a share, was last seen in 1995 and before that in 1987. This is a monthly chart of Newmont NEM. We can see here that the stock's really gone nowhere. You could trade the range over the years. It's really bounced around. If you compare it to something like Apple, for example, which has gone straight up, you can see the difference between a company that has low margins, that's not in a very good, a company that has basically bad economics. Mining is a very difficult business. It's hard to do at a profit. And so we see that Newmont has gone nowhere. If you held the stock for 30 years, you've made money from the dividend, but that's about it. If we compare that to the chart of gold, gold has really gone straight up since 1987. It's had sideways periods, it's bounced around, but it's a much different looking chart. And I would suggest that the Bitcoin miners if in 30 years from now, when we look at the stock charts of the Bitcoin miners, the publicly traded ones, they're going to look more like Newmont and less like gold. Owning a mining company is very different from owning the underlying commodity that's being mined, whether it's gold or silver or Bitcoin. Now, in addition to that, there's been a lot of insider selling. I'll link to this. This shows, we can see the red numbers over here, the number of shares that are being dumped on the market. So these guys, while the company's losing $8 million over 9 months, they're still paying themselves really well, awarding themselves stock options and cashing out. So they're not that interested in making money. They're more interested in selling stock and paying themselves. They're not interested in running this. If you're running this as a private business, you would shut it down very quickly, because no one wants a business that loses $8 million every 9 months. It's very different, though, if you have retail flows coming in, pushing the stock up. You can issue more stock. You can issue yourself more stock options, and you can really profit as an insider. And as I've talked about in a previous video, the management team here, the people here, are seem a little questionable to me. Now, there's also BTBT, which I've been getting questions about, another Bitcoin mining company that seems to do most of its mining in the U.S., Bit Digital. This one is whenever I look at these mining companies, these Bitcoin mining companies, they almost all turn out to be extremely scammy. In this case, this was a company. It's basically a Chinese company that's headquartered in New York. They used to be called Golden Bull Limited. And like many of these Chinese companies, I hate to say it, they're quite scammy, especially the ones that list in the U.S. and try to take down American capital. They just had to remove BTBT, Bit Digital, just had to remove their CEO. The chairwoman resigned, and if you Google it, you'll see that they've been battling allegations of fraud. There's some shareholder lawsuits against them, etc. So this is what you might expect in a low margin business that that's become very, very popular. No one's that excited about investing in gold miners, but everyone's excited investing in Bitcoin mining, even though, as we said, it's a very low margin, unprofitable business. If we take a look at BTBT's financial statements, this is the sort of a summary of the income statement for the 3 months ended September 30th. They had revenue from crypto mining of about $8 million. The cost of that revenue was about $6.2 million, depreciation of $1.1 million, SG&A. So they eked out a very small net profit from operations of $120,000. I believe this is. They're not 3 more zeros after this, but yeah, again, another very low margin mining business, just like RIOT. So I have nothing against trading a company like RIOT as a momentum stock. We can see that it looks a lot like momentum stocks that we've talked about in the past, where the blue line is trading above the red line. The blue line's the 50-day moving average. The red line's the 200-day moving average, and then the stock is trading above the 50-day moving average, the blue line. Great looking chart. It seems to sort of entered a sideways consolidation period. So what we're talking about here, you can be very cynical, and you can trade stocks that you know are bad businesses. You can trade them based on the flows. And one reason RIOT's doing so well is people who don't know a lot about Bitcoin. It's much easier to buy RIOT than it is to buy Bitcoin. You can buy it in a normal brokerage account, and as such, we've just been seeing huge flows into it. That being said, over long periods of time, this is going to be a very mean reverting stock. It's going to look a lot more like Newmont. So perhaps the big run-up we've been seeing in RIOT is very similar to what happened in Newmont right here. But when you have a low-margin business in a very highly competitive industry, you will get mean reversion in the stock. So feel free to trade BTBT or RIOT or any of these as a momentum stock where you have a stop loss. I talk a lot about this in my courses and on my YouTube channel. Make sure you use a trailing stop or some other stop loss, but just be aware that these are not fundamentally good businesses with good economics. It's all about the money flows and not about the fundamentals. Bitcoin, when it goes to $500,000, Riot will probably still be losing money if they're still around, because this is a low margin business. Even if they can mine one Bitcoin for $500,000, it'll probably cost them about $490,000 to mine that Bitcoin. And then they'll pay themselves really well. And so the SG&A costs, expenses will be really high. And the company will still be losing money, probably still having to issue stock to fund everything. The thing to be aware of too with these somewhat scammy companies is that they can keep issuing stock. There's no limit, especially when their stock price is high. They can sell more shares, issue new shares, use this to soak up, basically to fund their operations, because they're not able to fund the operations from cash flow from operations. And as a result, they'll keep diluting you as they exercise their options or as the company issues more shares. By contrast, Bitcoin will never dilute you. They're just 21 million coins, and they're not going to be any more ever issued. I talk about that in some of my other videos. But you may say one of these Bitcoin miners owns Bitcoin on its balance sheet. If they do, I think it's a better use of capital rather than buying one of these ASICs, which has a 1 or 2 year lifespan. If you buy Bitcoin and put it on your balance sheet, you begin to turn yourself into sort of a Bitcoin holding company or Bitcoin ETF, as MicroStrategy has done. But the problem is, if you buy a company that has Bitcoin on its balance sheet, something like MicroStrategy seems to be very well managed. Michael Saylor's very smart. He's not like one of these scammy Bitcoin mining companies, but it might be a good investment. It might be great that they're putting Bitcoin on their balance sheet, but you're still open owning the stock. You're still open to operational risks. Maybe they take a really big hit one quarter. They mess up their mining costs, or they pay themselves a little too much. And these companies are always subject to bankruptcy as well if they have a lot of debt. And so there are various counterparty risks that you have owning the stock. So instead of buying a company that's putting Bitcoin on its balance sheet, if you like Bitcoin, why not just buy some Bitcoin and put it on your own balance sheet? I can guarantee you that you are more trustworthy than BTBT. If you own Bitcoin yourself, there are no operational or counterparty risks. As long as you know what you're doing, you know how to store it on a hardware wallet like a Trezor, which I talk about in my other videos. I want to return by just talking about this difference between owning a gold mine and owning a bar of gold, which would be the equivalent to owning Newmont Mining versus actually investing in gold itself. If you are a gold mining company, the Environmental Protection Agency, the EPA, can shut you down at any time for environmental violations. And mining gold is a very dirty business. It's very rough on the Earth's crust. When people tell you that Bitcoin's bad for the environment, gold is much, much worse for the environment. Bitcoin often uses very clean energy, green energy, to mine. The other thing about owning a gold mine, your workers can go on strike. A lot of these gold mines are in sort of third world, unstable countries. The cost of extracting gold may skyrocket. As the price of gold goes up, you get a lot more entrants, which may drive down profit margins, etc. And then you have to buy this very expensive gold mining equivalent. But Bitcoin mining is in many ways even worse, because you don't even own the shiny metal that's under the dirt at your mine. You basically just own some hardware machines, some ASICs. And over time, you need to keep paying for electricity. So a gold mining company at least has some assets in the ground. It's like a giant vault, and it may be very expensive to extract those assets over time, but there are hard assets there. Hopefully there are hard assets there, and it's not some empty gold mine. But in this way, even though gold mining is very low margin, you are buying an asset-rich business, assuming they don't have too much debt against it. By contrast, if you buy a Bitcoin miner, you're basically a mining stock. You're buying a company that doesn't have Bitcoin reserves. It doesn't have Bitcoin hiding under the dirt. It just owns these machines, and it has the future cost of having to spend electricity to mine Bitcoin. So when I hear this question, Bitcoin's gone up so much, is there a Bitcoin mining company I can invest in? I heard the same thing in 2010, in 2015, in 2017. Apple's gone up too much. Is there another smartphone company that you could recommend instead? Should I buy BlackBerry or Nokia or something? The fact is, there's only one Apple. There is only one iPhone. There are imitators. There's the Android phones. But there's really only one Apple that has that brand, that has that quality. And in the same way, there's only one Bitcoin. Apple had gone up quite a bit from 2000, call it 2002 to 2010. It gone up many multiples, but it was still a great investment as it turned out. So if you want to make money in the stock market or in the cryptocurrency market, you want to buy things that have charts that are going up. If the chart's going down, you're probably going to lose money over time. There's a tendency for these trends to continue. So what's the next Bitcoin? It's very, very simple, actually. It's not the Bitcoin miners. It's not blockchain or a blockchain company. Blockchain is actually not that useful for very many things. You can do a closed database. There's no reason to do an open ledger, an open database in most cases. If you're looking for the next Bitcoin, it's not going to be some utility token. I need to make a video about this, why utility tokens also have very bad economics for the networks, and that a lot of value doesn't accrue to a utility token network. But here I'll just leave it at that the next Bitcoin really is Bitcoin. Bitcoin is the next Bitcoin. It can easily go up 10x, 50x, 100x from here. It's the scarcest asset in the solar system. It's like Apple stock. There's no substitute for it. And like Apple stock, like California real estate, like Hawaii real estate, Bitcoin has always been really expensive. Back in the old days when you could get a Bitcoin for $100, it seemed crazy back then too. Why would you pay $100 for a piece of digital currency that you couldn't hold in your hands, that was just software that might crash, etc.? And Bitcoin over time has gotten more and more expensive. It's more and more expensive not because there's a bubble. You don't have bubbles that last 11 years, but because Bitcoin has real utility to store value, to protect yourself against the ravages of inflation and central bank money printing, and also to provide very mobile capital. You can walk across a border with a Bitcoin recovery seed in your head. Just 12 words, you can move $1 billion over across an international border. And in this way, there's finally a separation of money and state. You've heard about separation of church and state in the whole American experiment. But a separation of money and state means that there's finally a form of money, a place where you can store your wealth safely, and it cannot be confiscated by people who disagree with your political ideas, your race, your national origin, your politics, etc. Bitcoin, you secure it yourself, and it belongs to you. And as such, it trades at a very high price because it's a very useful new form of money, a new store of value. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.